Good morning, everyone. Just testing to see if everyone's able to hear and see me. Hey, Ren, nice to see you. All right. I just need to play around my OBS settings for a bit because it seems like my face is being blocked by the by the thing. Anyway, just to see if doing a quick sound check to see if everyone is able to hear and see me clearly. Okay. Okay, good stuff. All right, so let's begin. Right, hey Graham, nice to see you, man. Nice to see you tune in. All fine here, good stuff. Let's begin first. All right, let's begin first. Let's check the lighting's okay. Lighting's fine. Thank you, thank you. All right. It's great to be back, right? So I got my team rotating this pre-market analysis. But don't worry, every pre-market analysis is the analysis is vetted by me before it's presented, right? But yeah, we're rotating it, right, between me, Ketan, sometimes Emily, right? So yeah, it should have fun every time you tune in, right? But rest assured that the quality is always there, because I'm always ensuring that all the analysis that we put out, it's been vetted by me previously. All right. So guys, welcome back to another pre-market analysis. Nice to see you guys here. Nice to see you, Fabio. All right. It'll be a pretty fun session. I think a lot of the forecasts that we had last week worked out. Some didn't work out, right? I think dollar yen, or was it dollar franc, didn't work out as nicely as I thought it would have. But a lot of those that required the upside and downside confirmations worked out very well, right? So let's see what's going to happen this week again. All right. I want to encourage everyone who is here that if you please send your questions over. If you have any, don't hesitate to send your questions over, because I literally have another screen that is open over here. All right, you can see my cat coming in the frame. I'm sure you can. Here, we got our trusty indicator again, right? We got our trusty indicator again, who likes to barge into barge into all our webinars. Right, she's been doing that since 2020, I think, right? For you OGs who remember her jumping into the webinars when during the COVID pandemic, right? All right. Okay, now let's begin today's session. Okay, remember disclaimer. All right, disclaimer. Let me move myself out of the way. Yeah, remember that everything in this webinar is educational in nature, so nothing should be construed as investment or trading advice. I recommend you to do your own due diligence before you guys trade. So of course, as I'm covering the sessions today, we have a lot of forecasts that we look at, upside downside confirmations, pivot, potential sell and potential buy values. All right, so these are all educational in nature and should not be construed as investment or trading advice. Okay, and our usual approach to the session is that we spend the first bit of it, right? Just let me nudge this a little bit. Yeah, I think it's here. We spend the first bit of the webinar. Usually previously we covered the key news events, right? But I'll leave that for Ketan later today, right? We'll focus mainly on your requests and the analysis on majors, right? So if there's any requests beyond, I think we had a request from Ren for pound dollar earlier, but if there's any other requests for any instruments you want me to take a look at, please send them through. I'll do my best to look at them, right? But I'll also be going through some of the key setups for the week, like the majors, the FX majors, the crypto majors, commodities, indices, so that we're very well prepared for whatever the week might throw at us. All right. And of course, introducing your host for those of you guys who do not know who I am. All right, just a really quick introduction. Right, my name is Desmond Leong. You can find me on Instagram. You can find it. I think it's over here. Right, Comfy Desmond. Right, I just basically post about me, my wife, and my kid and my cat over there. So not that much trading related stuff. Okay, all right. So not really those IG Instagram trader kind of profile. So yeah, you can find me there. All right. And of course, a little bit about me. Right, I run the award-winning research firm in the Everest Fortune Group, also Forex Army. Finalists of 2019, 2020, and 2021 for best FX and best equity research. Prop firm trader, right? Went through one of these prop firm tests. I think it was a 100K test to fund the account, right? Took it, passed it, the two phases. The first phase, passed it within 3 days. Second phase took me a little bit longer, right? So it took me, I think, a good 30 days or something, right? But it was all done using the daily analysis that we do here, and the approach to trading, the strategies are what I teach you guys over here, right? There is no secret strategy that I use beyond, I think, bigger emphasis on correlation, right? Correlation and Fibonacci confluence. Okay, so what I always want to encourage you guys is that, you know, it's not about paying for that $3,000 or $5,000 course trading course out there, right? I think there are a lot of trading courses out there, and don't think you need to pay for any of it, right? I went through some of them in the past before, but personally, I don't think anyone is really worth. It's really worth it, because here at IC Markets, we're bringing you guys the juicy stuff already, the good stuff, right? And a lot of the stuff that you learn here, I think you pay 30 grand, right? Then you might maybe get a chance to learn about it, right? But it's always the what I feel is the at the core of it, right? Good analysis is a combination of multiple analysis, right? Support and resistance, Fibonacci, momentum, correlation, right? If you know how to use oscillators, right? But I use the first three the most: support and resistance, Fibonacci, and correlation, right? Or did I say momentum somewhere? I use 4, right? Including momentum, right? I will show you in today's analysis how we got some of the really nice analysis previously. Our hit rate, for those who have been following us for the better part of the last few years, right? It's a good 70 to 80%, right? I dare continue to stick to those numbers. We do our analysis live, right? Meaning that it's all recorded here on YouTube, so there's no way that we can edit it, right? And say, and run away from what we analyze, right? So I think that holds us to a very high degree of accountability to you guys, that what you see is what you get, right? No editing. The calls are made live. If I don't think I've ever had a week where I had 70 to 80% of losses, right? Most of the time it's 70-80% of forecast working right, or maybe some weeks is slightly lower, right? But for the past few years it has been pretty good. Okay, so without further ado, let's begin today's session looking at the charts. Let me pull up my trading view charts here. There we go. Okay. All right, XAU GBP. All right. Pound GBP. I guess we could take a look at pound GBP, although it wouldn't differ that much from pound dollar. Nice to see you, celebrity matchmaker, right? We got Rick, Joey, good morning. Yeah, nice to see you. Nick, good morning, right? Oh, if I'm from Australia, so it should be about 7 a.m. for you. Good stuff. I think that's a very good timing for this pre-market analysis. Let me move myself out of the way. Let me move myself to this corner over here. All right, so it's easier. Okay, and move myself to this corner. Don't block too many things. All right, let's begin. Let's begin the analysis. Okay. So right off the bat, I think one of the key things that people are looking at crypto, right? We highlighted the first resistance very nicely, right? Notice how price dropped from the first resistance all the way back down. It broke all the way back down to a first support, right? So this first support is holding very nicely. Why do we highlight this as the key first support, right? Oh, Boon Hong, right? I'm from Singapore, right? So it's about what's 7 a.m. your time, right? 4 a.m. your time, sorry. Yeah, it's about 4 a.m. your time, right? So yes, pretty still pretty early, right? Yeah, but I'm from Singapore, right? You can swing by once in a while to say hi. Okay, sorry. I think we have some feedback from people that I'm being blocked by the logo, so I need to maybe I just nudge myself all the way here. Okay, yeah, because I'm being blocked by that logo at the corner. But I will then expand this space a bit. Okay. All right, let's go. All right, pound dollar. All right, got pound dollar request. Got it. Jake, nice to see you. Thanks for tuning in. All right. Yeah, feel free to tell me where you guys are coming in from, man. I'm actually going to Australia. I keep saying that. Yeah, I go to Australia again, right? Couldn't go over the weekend, over Christmas because my kid got pneumonia. A lot better now, but I will be going, if you happen to be there, I will be in Melbourne for a short period of time at the end of March. I think it's from end of March to early April, right? I'll be in Melbourne and Tasmania, right? Yes, Tasmania. So if you happen to be there too, right, I'll be over there, right? Sophie from England, nice to see you, right? Was at England just a few months ago, I think. Yeah, I had to cancel the Kangaroo Island, right? My kid fell sick, right? So the doctor recommended not to travel, right? Can you apply the same strategies in Forex for XAU GBP? Yes, you can. All right. So Bitcoin actually held itself very nicely above this support level, right? And this continues to be the main support level that we are going to highlight and stick to for this week. Okay. Why is it this level instead of this level over here? Now, some people might be wondering why not this level over here, right? You know where the wicks are. Why do I take it over here? Okay, and this is one of the key lessons that I want to teach you guys. All right, when drawing support and resistance lines, okay, what you want to do is you want to try to get the most number of candles. You want to get your line to touch the most number of candles. As you can see over here, I'm touching 2 candles. I'm going to zoom in a bit. Okay, over here I'm touching 2 candles. Okay, if I move it up over here, I'm touching 4 candles. No, wait, 6 candles, right? If I move it up even more, right, I'm touching 7 candles. Maybe you can argue that there's about 8 or 9 over here. You want to touch the most number of candles without cutting, while intercepting, or rather cutting the least number of bodies, right? The candlestick bodies, right? So there's always a difference between drawing the support line over here or drawing the support line over here, right? You draw the support line over here. Yes, I catch a few more candles over here, but I'm cutting the body of so many candles and it does not look nice. I usually allow myself to just cut a few candles, 1 or 2, right? In this case, it's cutting too many, so you're compromising your support line, right? So, you know, I can draw it here technically, right? But look at how many times the price cuts the body of the candles, right? This is way too many times. Okay, so what I then do is, you know, I try to get the level where price touches the most number of candles while cutting the least number of candlestick bodies, and it will be over here. So that is usually the way, if you observe when I draw support and resistance, how I arrive at these levels. Okay, all right. All right, okay, Nick's in Sydney. All right, no worries, right? One day I will convince my wife to go to Sydney. Apparently it's it doesn't have as many animal farm stays, right? Farm stays and and fun stuff to do compared to Melbourne and yeah, actually in Melbourne, right? I think Melbourne is more chill, right? So if I'm going on a business trip, definitely to Sydney, right? But if I'm going with like bring a kid to go see the giraffe and kangaroos, I guess maybe Sydney a little bit less, right? Okay, Jake, I will take a look at the Nasdaq 100 soon. Okay, right. So this is how I arrive at the first support, right? And the second support, right, is reference all the way from here, right? Exactly. We're gonna keep the view over there, right? No big change on crypto. I'll be waiting for price to, if it breaks this level, to trigger the move down. But I believe it kind of has found its little support level over here, right? If you're waiting for price to really like bounce from here, I would kind of wait for yeah, maybe more of this level over here. Yeah, wait for price to trigger this to break past this, right? This would probably be my, yeah, wait for price to break past this level to trigger the move up to first resistance. Okay, now just give me a quick second. I just get water. Sorry guys, I forgot my water. All right, so now we move to Ethereum. Ethereum continues to hold very nicely above our first support level. So that's an important thing that I want to highlight to you guys when you're drawing these support and resistance levels, is that if you draw them nicely, right, price will usually respect them, even though there's no view for the week, right? So there's always three things we look for when you look at the market. The market is either bullish, is bearish, or is neutral, right? Neutral, it is if it's very clear conviction, right? We'll say that it requires price to break a certain level to trigger a move down. Otherwise, neutral and where the support and resistance levels, right? So we highlighted this support level last week, right? Price seems to be holding very nicely above it, right? And at the same time, Bitcoin is above this nice support level. So I do believe, right, this level on a correlated level is going to hold quite nicely, right? Ideally, right, we should be seeing price make a small little bounce from here to rise towards the first resistance, right? I'm kind of looking at that. I hope it happens, right? Yeah, I hope it happens, right? For price to make the little bounce from there. Little bit of bullish momentum, as you can see. Price continues to be above the Ichimoku cloud, right? It's not the best indicator for momentum, but it's usually a sufficient one, right, for us just to get a quick idea of where what the momentum of the market is, right? So nice bit of Ichimoku cloud over here. Let me see. A little bit of a trend line, kind of support, as you can see over here. Not the best, right? But you can see price is kind of going higher and higher, right? Making higher lows, right? So ideally, you should be able to see price make a small little last push up to the first resistance level. Okay, it's unlikely that it's gonna drop all the way again. Okay, now let's look at DXY, right, on the Forex side. This always establishes our first view. Last week, remember, right? Last week I was highlighting this upside confirmation. We realized, right? We realized that price. I'm gonna remove all these Fibonacci levels for you guys. Right, we realized that price broke this descending channel, right? But it was stuck in between here, right? So our view was that if price broke the upside confirmation, right, it could trigger price up minimally to this intermediate resistance level here, right? So it has since done that. It reached its target. Nice little bit of overlap over here, right? And so let's see where price is gonna reach next. Okay, so sometimes what I like to do when I do an analysis is I remove all my previous drawings, right? You remove all your previous drawings so that, right, you have a clearer view on the market, right? You don't get bogged down by what you drew previously. Okay. All right. John Barbados, right? Just to sidetrack here and answer a quick question by celebrity matchmaker, right? If you let me know your name, right, I can probably refer to you by name, right, in the future instead of calling you celebrity matchmaker all the time, right? Or at least your first name, okay? Is it safe to trade more than one currency pair, or should I just stick to one? So my recommendation is that you should trade more than one, right? The reason for that is if you were trading only one instrument, like if you were to trade only euro dollar or only trade dollar yen, that's the same as trying to trying to fix a jigsaw puzzle by only looking at one corner of the jigsaw puzzle, right? Is you're trying to think what the whole picture is, right? But you're only looking at one corner, right? So the thing about the Forex market is that everything moves in correlation, right? You got DXY which goes up, then you got euro dollar that goes down, right? You got euro dollar that goes down, you got dollar franc that goes up, right? DXY strength, you know, and then what you can expect from dollar yen, what you can expect from then S&P 500, what can you expect from gold, right? And in many ways, all of these are correlated, right? So weak correlation or strong correlation, but if you look at more of them together, it allows you to have a better, it allows you to filter out your trades a lot. So when you're looking at the way I analyze, I always look at correlations. When I get a view on DXY, I then compare it against euro dollar, dollar franc, and even sometimes pound dollar to get a better idea on what the market is saying. Okay, right. Roy, nice to see you, man. Right. Yeah, nice to see me again. We will be rotating a bit between me, Ketan, sometimes Emily, right, to do the morning analysis. Okay, but rest assured, I'm looking through all of the analysis before it's presented. Okay, so DXY, right, we can establish, right, that broke out of the channel previously. What I always like to do, right, highlight my key support levels, right? I got very nice support over here. What about my resistance? Price reversed quite nicely from this resistance. Probably gonna put it as a first resistance. And I got a very nice second resistance over here, right? Very nice second resistance just about over here. Notice how price touched, those of you guys who have been in my lessons, you know this is what we call overlap resistance. Price touch it one time at the top, bottom, one time at the top, right? Same thing as over here, one time. Okay, so we've established that this is a nice first resistance, and this would be a nice second resistance. This for me forms my base now. This would be my first support. Let me think. Okay, I have this view over here. All right. Strong bit of Ichimoku cloud over here. So it might be a little bit risky for me to call a bounce. But why? So this is a perfect example where I would then go into a correlated instrument to then get an idea whether we have a slight biasness to being bullish or bearish on DXY, right? So I now go to euro dollar first, okay? Euro dollar holding quite nicely above our support, okay? Nice bit of channel. It looks like price is breaking out the channel. So I would change this to a bearish channel, okay? Our resistance level, quite clearly I can put it over here. Notice why I put the resistance level over here, right? We can, sorry, sometimes I take a little bit longer to explain, and the reason is because I want to teach you guys. I don't only want to give you guys, you know, the fish, right? The metaphorical fish on what the analysis is. I want to teach you guys how I do it, right? So in the future, if I'm not around throughout the week, or you know, you can check it out, you can try it out yourself. All right, very nice first resistance over here, nice little bounce, nice little reaction, right? You can see 3 times, 4 times, right? And we're getting the most number of wicks with the least number of candle interceptions, candlestick body interceptions. All right, so as you can see over here, right, we got I would consider this as maybe like the downside confirmation. Price needs to break this, right? Give me a while, let me think. Oh, Michael. All right. All right, nice to finally put a name to the nickname, Michael. All right, nice to have you here. Yeah, Fabio, it's a little bit tricky, right? Let me look at dollar franc to get a view, right? Dollar franc broke out of this level, rose up to here. I was hoping that it would drop from here though, quite honestly, but it didn't. But we then need to take a quick look at dollar franc, right? I do like the idea that dollar franc is actually on a pretty nice, in this case, dollar franc is, I think it's this big move over here. Is testing a key 38% Fibonacci retracement, right? So I'm going to put 38 and 61. Let me just see if I'm missing anything. Okay, still a little bit of bearishness from the Ichimoku cloud on a dollar franc. I just need to I need to find the correct level. Only 78% goes up there. Okay, so this is a very clear second resistance. Now, some of you guys might wonder why I'm looking at, I'm jumping between dollar franc, euro dollar, and DXY, right? And the reason is because they are all strongly correlated, right? So if you look at, if I just overlap, right? If I overlap DXY, right? If I overlap DXY on dollar franc, look at them, right? They move in tandem, right? When one goes up, the other goes down, right? Let me see if I can overlap. Yeah, see, when one goes up, the other goes down. When one goes down, the other goes up. So you notice that they are quite strongly positively correlated, right? And at the same time, I can throw on something like euro dollar, right? This one, yeah. I can throw on something like euro dollar and notice that they go in opposite directions. When one goes up and goes down, the other goes down and goes up. So they're negatively, strongly negatively correlated, right? So they need to move in tandem with each other, right? Which is why I'm looking at them together, right? So if I'm saying that DXY is going to drop, it's likely going to mean that dollar franc is going to drop. It's likely going to mean euro dollar is going to bounce. And that is why you cannot look at just one instrument, right, Michael, or one currency pair. You might, the one currency pair like euro dollar might give you a false breakout, but if the other instruments tell you a different story, it can then help you avoid a false breakout. All right, hey Springfall, nice to see you too. You can let me know your first name, right? I can probably call you by your first name in the future, right, instead of calling you Springfall each time. Okay, all right, so I do believe, right, there's a decent chance that we are seeing a reversal on dollar franc, which means that we should be seeing a reversal on DXY, okay, which means that we're likely to see a bounce on euro dollar over here. That means this is really a false breakout on euro dollar, right? Exactly what where is it? Yeah, exactly what Fabio mentioned. It could be a false breakout on euro dollar because it doesn't look like, it looks like there's a higher chance that price might be making a smaller bounce from here to here, right? We can't call a move too far, so I wouldn't be confident to call a move all the way to here. But just for the week, right, it's a decent chance that we might see price make a bounce from the first support to the first resistance over here, right? It's likely that we might see DXY, the dollar franc, make a reversal. I wouldn't call the reversal too far away. This would be enough for the reversal, right? We'll ideally be looking for a reversal or from here to here, right? This is a 38% Fibonacci retracement, right? You can even argue that there's a little bit of overlap resistance over here, right? A little bit of overlap resistance, as you can see over here, right? But I would just use this level for now, right? Nice bit of descending resistance line, right? And a nice bit of bearish Ichimoku cloud pushing prices down, right? So so yeah, I do think price could minimally drop to this first support level. Okay, right? That means, right, for DXY, right, for the short term, just for this week, we should be seeing prices come back down to test our first support. And this is how you use correlation to find your key support and resistance levels across multiple instruments, right? You need to line them up together, right, to get the best chance of potentially being correct. Okay, now let's go to pound dollar, right? Pound dollar, as I think is a request, right, from Ren, right, continues to hold nicely below our first resistance and support. Just for the sake of this, I'm going to remove the charts so it's a little bit clearer. Resistance, 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 resistance. Okay, I would highlight this as first resistance, right? Notice while I didn't draw my first resistance at the high point over here, right? What I did was I moved my level so that I can try to intercept and capture most number of candles while cutting the least number of candlestick bodies, right? So you can see I can cut. It's like a surgeon knife, you know, have a precision cutting to just cut through this bunch of candles over here, right? So you need to train your eyes to be able to see something like this, right? This cuts through. You're able to get 1, 2, 3, 4, 5, 6, 7 candles just by cutting one body over here. It's really worth it, right? So we're just cutting literally one candlestick body, and we're able to touch 1, 2, 3, 4, right, 6. We're able to cut almost 10 candles over here, right? So that's how I always go for it, right? Least number of candlestick bodies that you can cut while getting your line to touch the most number of candles, right? So this usually requires you to look at the candlestick wicks to get them. Okay, so I got a very nice first resistance over there, right? I got a very nice first support over here. Bam, right? My first support is down here. Okay, now what can we expect? What can we expect? Just let me see if I got a channel. I always tell you guys, right, and even tell my team that the best learning is actually learned while you're observing someone's thought process as they try to do an analysis, right? And that's the reason why for every analysis that we do, we don't just show you the final analysis. We actually go through the entire thought process of analyzing the chart, right? Because I think that really helps you get a better idea on like every single step along the way on how we see if something is a support or resistance level, if it's a breakout, if it's a confirmation, right? I think all this is very important to you guys learning, right? Yes, I would take the chance to look at gold, and nice to see you, Daniel. Okay, I would then highlight maybe a second support over here, right? I got a bit of a second support level over here, right? If we're expecting a bounce on euro dollar, there's a decent chance that we might see a bounce on pound dollar too, right? I suspect that it's probably going to fluctuate. It's probably going to continue fluctuating around this support and resistance level, right? There isn't a very big, this is a pretty big resistance and pretty big support, right? But because we are going to expect DXY weakness, which means pound dollar is going to go up, right? We're probably going to expect a little bit of fluctuations between these levels over here. Okay, let's try to fine tune it with a Fibonacci, right? I like to fine tune my levels with a Fibonacci, right? And there is, well, there's nothing, right? So I won't even bother drawing it. Okay, so pound dollar over here. Take a quick look at dollar yen, right? So last week we had the upside confirmation of this level, and we say if price broke the upside confirmation, remember, right, it will come up to the first resistance over here, right? It has done that perfectly, right? So for those of you guys who followed the setup, congratulations, you know, should have made a good amount of money, right? Very, very clear break, right? Close price, cross the upside confirmation and make a push up, touch the first resistance level, and it stopped, right? So lovely analysis for those of you guys who got into it. Now, we start again, right? What am I looking at for the resistance, right? I always try to draw a line and try to cut the most number of levels, right? So I got the most number of candlestick cuts just about maybe over here, right? Sometimes I can do it over here, right? But this candlestick week, you know, it can work out, right? Can it go further back? Nope, it can't go further back, right? So I will stick to this level over here. This is my first resistance, and it's actually a pretty good first resistance because if we're expecting DXY weakness, dollar weakness, naturally dollar yen might drop a bit, right? So this, I wonder, is it a Fibonacci level? Actually, it's not a Fibonacci level. I think the closest Fibonacci is 78.6 over here. So we can give this a little bit of breathing space, right? Because of the 78.6 Fibonacci retracement, let me see if I can find a confluence, right? So you got a nice zigzag level over here. It could be the 61. Could be. Yes, 61.8, right? So this is how you do a Fibonacci projection. A Fibonacci projection requires you to take 3 points, right? So in this example over here, right, my Fibonacci projection took 3 points, right? 1 point over here, right? It goes all the way up to here. I take my second point over here. It comes all the way down to here. I take my third point. What you want to look for is this clear zigzag level. The clearer it is, the clearer your Fibonacci projection. Okay, and what I found is I found a 61.8 projection just about over here. Okay, this 61.8 projection lines up with this 78.6 projection retracement, which I did over here. And this is a perfect example of what I'm going to teach you guys on the concept of fine-tuning your analysis. All right, so we have a first resistance highlighted over here, right? Now, basic support and resistance tells you that, you know, this is a first resistance, but because we have such a nice confluence level that lines up over here, and there's also arguably some nice little price action over there, I would then highlight this area instead, right, as the resistance area to look at, right? And this would be a bearish area, right? So we know that we're not expecting a reversal right about here. Price might come about here, it might fluctuate around here a bit, right, before reversing. But you can notice that there's a nice little bit of a overlap kind of resistance over here, right? Nice Fibonacci projection, right? And so a nice Fibonacci retracement and nice confluence, right? So we're just gonna put that as the area where we ideally be looking for a reversal from, okay? And if a reversal were to happen, where can we put our support? I really like this level, right? This would probably be my intermediate support, right? And if price does break this level, you know, we could see it drop further down to here, right? You could even draw it all the way to here, all right? But I'm just going to leave it over here, okay? Yeah, so this would be the view for dollar yen, ideally seeing a reversal down to here. Okay, notice how this intermediate support line that I just drew, you know, it barely cuts any candlestick bodies, right? It only cut this candlestick body over here. I'm gonna circle it for you. It only cut maybe this candlestick body over here, right, and the previous time over here, right? Otherwise, all the other levels that you see over here, it only cuts the wick, right? Only cuts the wick. Very nice, right? So that would be my intermediate support because it's very, very close to price. If price breaks that level, you know, we should ideally see it drop all the way down to the first support. Again, very, very nicely, price is cutting the candles without cutting the candlestick body. Fine tune this with a bit of Fibonacci. Right, price needs to break the 23% to, you know, to potentially drop to the 50%. All right, I'm good with that. There we go. Right, 23% retracement needs to be broken, which is correct, and that usually triggers the bigger move down to the 50%. Okay, now let's take a look at dollar CAD. Dollar CAD, not much of a view last week. Let's see what we can look at for dollar CAD. A bit tough to look at anything. Sorry, this irritating. Let me just move this up here, so I stop triggering it every time I try to touch it. Bit of support level over here. Nice overlap support. You could argue, right, a bit of a resistance level over here. I have to say, I don't see much on dollar CAD. A little bit hard for me to call a move. You know, if you're just catching the wicks over here, you could say that there's a little bit of resistance. A bit tricky. I would maybe say this is the downside confirmation, right? I'll probably have this as like the downside confirmation, and if price breaks the downside confirmation, right, it ideally should trigger a move. Not a very high probability setup, but I'm waiting for price to break this downside confirmation, right? It has a nice bit of bearish momentum, right? Still below the Ichimoku cloud, very strong cloud over here. So what I always teach you guys is that use the size of the cloud to confirm, right? Use the size of the cloud to confirm, right? The bigger the cloud is, right, it is the stronger the like it's just like rain, right? If you see a lot of cloud in the sky, right, you know it's a heavy rain is coming. But if it's just very, very light clouds, you know, very thin clouds, you know, that you have a high chance that it might not rain. So the same thing as Ichimoku cloud. If it's a pretty big cloud, you're going to see a pretty big amount of resistance over here. So ideally, right, we're going to wait for price to break below the downside confirmation to trigger the move down to first support. Not super confident on this move, but it's definitely worth looking at. We got a question from Yaya. How to enter on upside downside confirmation? Usually I wait for price to close above the upside or downside confirmation level. Sometimes you can go one time frame lower to get in earlier on the confirmation, but you need to wait for price to be broken before you do that, right? So if price looks like it's just wicking around that level, you know, you probably don't. But for those of you guys who are a little bit more confident, if you see price make a big breakout and then there's a little bit of a pullback back down to the confirmation level, for example in this case, right, if price were to come down to here and then it's starting to pull back, you notice that the candle is about to close, right? It might be a good idea to enter on the pullback to trigger the move down. Okay, so that's one way to do it too. Enter on the pullback. You can't enter in situations where price, you know, comes down here and looks like it's fluctuating here. So this is one way where you can't enter a breakout. The other way is that if price closes over here, right, it makes such a big breakout that price closes over here, right? So is that you then ideally should wait for the pullback to enter, right? But you can't enter over here because your downside potential is too little, right? So it's okay, you ideally need to wait for a close. But if price breaks out with too much strength, don't go chasing that trade, right? It's better to just say, I'll come back another day, okay? We take a quick look at Kiwi dollar. Kiwi dollar, right? We had the view that if price broke this downside confirmation level, which is the 23% Fibonacci retracement, right? It would then trigger the move down all the way to the first support. It has since done that, and so if you got in on this trade, congratulations, you should have made a good amount of money, right? And this is an example of downside confirmation. Look at this, right? We did this analysis last week on Monday, right? 8th of January. No, sorry, 15 January, right? That day, price closed over here, right? Price closed below our downside confirmation level, right? This then triggers the move all the way down, right? So it waits for price to close over here. This is still close enough. If price had closed over here, then you probably can't get in on it, right? But if price close over here, just enough time for you to take the trade, to play the move down. Stop loss, you can put it slightly above the downside confirmation level, right? Because this is a key breakout level already, right? So price should not be reintegrating above there. So you can keep a very tight stop loss too for these downside confirmations and upside confirmations, okay? So what do we expect this week for Kiwi dollar? Nice bit of support over there. I like this 50% Fibonacci retracement. $100 Fibonacci projection. Very nice little zigzag line that you can see over here. All right, zigzag, 100% Fibonacci projection that comes back down to here. Okay, so I found enough levels to convince me that we might be able to see a nice little bounce from there, right? Right, so I'm going to highlight this as a strong area of support, right? This is going to be a strong area of support. Right, this is going to be my first support. Ideally, we're going to look for a bounce from here, and the bounce, we don't need to play the bounce too far. I'm just going to play the bounce to this level over here as the first resistance, right? So I'm going to play the bounce from here up to the first resistance. Fine, yep, that's it, right? In terms of stop loss levels, you can consider very nice 61.8 overlap support over here as the potential stop loss level if you take this trade. Right, simple enough setup, really love it, right? Throw on the Ichimoku cloud, very strong Ichimoku cloud support here. I would think it's a little bit, you don't wait for it. If you want, you can get it now, although I would think that the price might make a shoot go down a little bit more. I might wait for my pending entry right at the key overlap support level, right? So price might come down a bit, touch this level, and then bounce up, right? All right, yeah, I will copy and paste today's chart in the chat. Guys, if you don't have, right, we have a Telegram group. Let me just copy the link for you guys over here, right? Do join the Telegram group. I will copy and paste these charts over into the Telegram group for you guys to look at, okay? So you can take a look at it too, all right? Yeah, so do join the Telegram channel. Okay, so quick look at Aussie dollar. Aussie dollar, right? We had the same move, right? Wait for price to have the downside confirmation. Price has triggered the downside confirmation, you see, over here, right? This candle over here on Monday last week, right? When we did the analysis, this was the confirmation candle. Since then, it dropped all the way down to our first support, right? If you want to find our previous analysis, just go onto the YouTube channel. You'll notice that we highlighted this support level perfectly. Right, so that is what I like about this, right? Look at this, right? Price really drop all the way down, touch the support level, and bounce up. And that is how you know we are accurate with our analysis, right? That is how you know we are accurate with our analysis. We don't just draw a level over here, right? We actually drew it exactly at the correct point. And to get this level of accuracy requires you to do what I do, what I shared with you guys. Find the most number of interceptions while cutting the least number of candlestick bodies. All right, So what I like about this move is that with Kiwi dollar also sees a nice bit of support over there, right? So I'm going to establish this at the first support, right? Likely, we could see a little bit of a bounce to this resistance level, probably over here. First resistance, likely to see a little bit of a bounce, right, to take prices up to there. I'm going to just do a little bit of Fibonacci. Yeah, this is fine. Second support level I'm looking at probably over here as a potential stop loss level, right? So look at bounce. If you want to wait for the reversal back down to the pullback to the first support, it might happen. Although personally, if you are going to expect DXY to drop right away, price might just take off and reach our first resistance, right? So I like that Aussie dollar and Kiwi dollar, which are both positively correlated, meaning that if one goes up, the other goes up, one goes down, the other goes down, right? So it's likely that it's going to bounce. Then rather, I like that they are both moving in the same direction and both bouncing off key support levels, right? So this is how you use correlation to improve the forecast, right? The potential, the chances of you being correct. All right, so back down to WTI, right? Before we finally move to gold, all right? Same thing. I think we highlighted a lot of man, it's tough. Yeah, last week gold we didn't have a view on it, right? But let me just see if I can find a view for you guys over here. Very nice first resistance. Price might be breaking out of that little bit of channel, right? Price might be breaking out of a channel. Yeah, price looks like it's making a little bit of a bullish breakout from this channel. And if it's making a bullish breakout, I know it's very difficult to find the support level over here because price is really wicking around too much, right? So let me go to the higher time frame a bit. Let me see if I can find that level, right? On the higher time frame, right, I can establish that there is a little bit of sorry, I can't draw it. Let me see. This would be my upside confirmation. So notice that I can't really find the level over here, but if I go into the 1 week time frame, I notice that this is a little bit of the overlap, right? Notice I can cut a lot of candles while only cutting one body of a candle over here. So I can use this from the higher time frame. Then I go into the lower time frame and it gives me a little bit more clarity that amidst all the chaos, this is ideally, right, the upside confirmation. And if price closes above this level, we could trigger a move up to the first resistance up here. Okay, in terms of potential stop loss levels, right, you could consider a nice little bit of support over here, right? Our first support down here. Okay, right, pretty decent move, right, for WTI. Now last one I'm probably going to take a look at if I have time. Yeah, gold, right? Gold continues to hold quite nicely. Let me no big developments from our view last week. Let me see if I can do a fresh analysis on this. Nice first resistance over here. So this is the importance, right? When I draw this first resistance, I know, see, if I go into the one time frame higher, this first resistance, right, is not just any resistance that is over here. This first resistance is actually a first resistance that can stretch all the way back to this level, all the way back to a high from August 2020. All right, so this is a very big first resistance level. Okay, it's not just any small resistance level, Okay, now I find it a little bit difficult to find the support level over here, so I can also go into the higher time frame and I zoom in over here. So I notice that this is it. Okay, look carefully. Our surgeon incision, right, would probably be over here. Bam, right here. See, I'm almost cutting 0 candlestick bodies if I draw it over here on the higher time frame, right? So I'm gonna put it here. You could technically use this and sacrifice a few candles. Although personally for me, I think this could be a pretty good level. Okay, then we go into the lower time frame over here. Right, and there it is. This is the exact level that we're going to look at on the higher time frame that gave us a little bit more precision, right, to our analysis. Okay, so this will be a first support, this will be a first resistance. Likely price is going to fluctuate between here. It required this level to be broken first, right? I do believe if it breaks this level, we could ideally wait for a drop to this level here, right? I wouldn't dare. So you think about it, would I dare to play the move beyond here? Given what we saw on the higher time frame, it would be a little bit too dangerous for us to call such a big move, given that it's a high from the last 4 years. All right, so ideally, I'll be waiting for price to kind of break this level to trigger the move down to the first support, right? And of course, if it breaks that, we have a nicer drop, right, to the second support. Okay. Yeah, so I know I said US 100, Nasdaq 100. Let's see, right? Oh man, this is crazy. Spike up, right? Can we move Fibo to find a level that confirms? You can move I usually use support and resistance and correlation to establish my key view on the analysis first. I use Fibonacci to fine tune. It's dangerous to use Fibonacci to you can use Fibonacci to confirm too. So if you got one key level, but you don't have any other elements lining up, Fibonacci can act as a good reason, like dollar yen, right? Dollar yen, we got a good level over here, but because I was able to find so much Fibonacci over here, right, it then gives me the confidence to call a reversal from here, because I know that if for price to have to break past this level, you need to break past a pullback, you need to break past a 78.6 projection, you need to break past a 61.8 retracement, which is a nice bit of confluence over here. So I use it to confirm my analysis. A single resistance or support level by itself usually is not enough to confirm a trade. You need additional reasons, right? And this is where if you get a very, very good, nice, clear retracement and projection, right, you can use it as a confirmation. Okay, US 100, right? I always have a saying, right? If there is no good reason to look at it, I don't see any other levels. Jake, I have no idea, right? So usually, right, it could be a liquidity, it could be what I call some people call it liquidity grab, where there's really too many sell orders over here, right, with their stop losses places above here, right? So what happens is that, right, with all that stop losses over there, right, it does this nice little spike up, captures the all the trades over there and reverses, right? So that could be one of the reasons where it happens, right? Probably a good way is to do a little bit of Nike tick analysis. It might just rise all the way up to the 161, right? Just maybe a slightly higher before it reverses. But for me, I would stay out of this trade because, there are so many nicer trades to look at today, right? I don't usually like to trade at all-time highs, right? The danger about all-time highs is that everyone is looking at it, right? Everyone is looking at it across the whole world, right? Thinking it's a nice trade, and I feel like that might lead to a little bit of it's a trap kind of mentality, right? That everyone is looking to place the sell order at the all-time high with their stop losses a little bit higher. Then it gives this perfect opportunity, for this kind of smart money to really just spike up, take everyone out, then drop. So I tend to stay out of these kind of trades if I cannot find another level, right? The problem with all-time highs is that it's very hard for you to find a Fibonacci retracement, right? Which usually forms the basis of quite a number of reversals. Okay, I hope, yeah, I know that probably isn't too satisfactory an answer, but yeah, it's a bit tough for me, right? Yeah, me too. A bit surprised at how high it got, right? Look at the rest, man. It's a bit tricky. Actually, the rest of the indices analysis is working out quite nicely, so I'll probably just leave it over there. Okay. Anyway, guys, we've reached the end of our time here together. Right. Thank you for staying with me throughout this session. If you found it useful, please smash that thumbs up button. Right. For those of you guys who will be, let me just find over here, who can attend our other session later today. Take note from February onwards, right? Our analysis, our weekly Monday analysis will be moved to YouTube Live too. Okay, we have a live analysis session later today, right? I believe it is down at it's by Peggy, right? So yeah, for you guys, you can tune in later to Peggy's live analysis session. Right, I'm just gonna paste it for paste the link here for you guys, right? Right, thank you, Roy. I hope you found it useful, or I'm glad you found it useful, right? Right, yeah, it's a spring for, all right, was it Michael, right? No, Daniel, yeah, Daniel. So the safe answer is a little bit tough to call the move on the indices, right? And hard to say why price tends to spike up beyond like a major high, right? But remember, when it comes to trading, no one forces us to take a trade that isn't an optimal setup. My definition of optimal setup is that you need multiple elements lining up together. You can't just take a all-time high, right? Ideally, right, if you can find retracements, correlation, right, projections, right, they can set things up nicer. That does not mean, and this is an important point to take note of, that does not mean that a reversal won't happen. Okay, meaning that you should not place too much confidence into a trade like the US 100 thinking that price is going to reverse. Always have a systematic approach to trading, right? The world can line up, the stars can line up, right? And looks like it's going to be the perfect reversal, right? But that should still stick to your same risk methodology, right? You either, like for me, if it's a okay setup, it's about 0.5%. If it's a good setup, it's 1%. If it's a fantastic setup, it's 1.5%, right? I increase in increments of 0.5, 0.5, 0.5. So even if it looks like the best setup in the world is 1.5%, right? I will not go beyond that and start risking like 5% on a trade because it looks nice, because that will tend to throw things out of the law of large numbers, right? It just takes 3 of those trades to not work out, and suddenly my account is down by more than 15%. Okay, guys, right? So it's important thing to take note of, right? You can have everything lining up perfectly, but a trade doesn't work out. Don't look for a reason. Don't look for a reason why it didn't work out. I know it sounds a bit funny, right? But don't look for a reason to try to bring meaning to why it didn't work out. Sometimes it didn't work out because it didn't work out. Sounds funny in that way, right? It didn't work out because it's a law of probability. The moment you try to find meaning, right, is where you're trying to find the absolute explanation to every single trade not working out, and that's danger. Because in trading, it's about probability. It's not about being certainty, right? You'd get a false sense of certainty if you can bring a meaning and a logic behind everything. Sometimes I got a 61.8 retracement, 127% Nike tick extension, 100% projection, pullback support, right, on an ascending support line with nice Ichimoku cloud, and yet the trade didn't work out, right? I just look at it and be like, damn, right? It didn't work out. I'm not going to try to find a meaning to it. I won't do that crazy, mapping stuff. It's like, it could be this, it could be that, but it just didn't work out. All right. So it's important not to try to find meaning behind everything. Just take it on the chin, right? Say, yeah, it didn't work out, and that's it. All right. So that kind of mentality will help you last a long run in trading, right? Just, don't try to find meaning. Don't try to find logic behind everything. Just realize that trading is all a game of probability, right? You can be 80% right, you can be 90% right, but you can still be that 10 to 20% wrong. Okay, guys, that's it for me. Thanks for staying throughout today's session. It was always great chatting with you guys. Stay safe, trade safe, right? And for whoever's going to be in Tasmania, in Melbourne in end of March, I'll see you guys there hopefully. All right, stay safe, guys. Adios. Bye bye.